Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Dr. Khadijah Mama Isa. I'll be your instructor for your taxation 2. So this semester we only have one class, section 1 at 2 p.m. every Tuesday and Thursday. So I welcome you to the new semester, semester 2, 2023, 2024, and I hope that, all right, you look forward for the semester as well as to learn new knowledge, new things in your taxation too, all right? But first of all, I would like to apologize that for the first 2 weeks in the semester, I am not around because I'm taking my Umrah leave from 5th to 16th of March. Then I will only come back to class on the 19th of March. Yeah, so we'll see each other face to face in class, SR 3.9 on the 19th March 2024. Right? So what I'm going to do today is that I will just go through the course outline as an introduction to the syllabus, all right, and then to look into your course material and the assessment for the semester 2, 2023-2024. Right. First, I hope that you can see that this is our course outline. All right, for ACC 3142, as I mentioned, we only have one class for the semester. So what is all about? Well, it means that, okay, this, all right, there are some adjustment for this because we have actually taken out the partnership from taxation 2 because it's now is in your tax 1. So I believe most of you have done your tax 1 in the previous semester. And then means that you have covered your partnership. Yeah. So whenever you have partnership, then it's no longer there. Yeah, in tax 2. So you reduce one topic in your taxation 2. All right, so and then this course we only look into company taxation. So that's the main, all right, topic in this course. We're looking at company taxation. If you were in your tax 1, if you, I hope that you still remember, all right, all what you did was on individual taxation. So when we come to tax 2, we are going to look into corporate taxation or company taxation. How to compute the chargeable income, all right, from business income and business expenses. We will only also look into investment incentive. So these investment incentive are the tax mechanism that company can make use of in order to reduce their tax liability. All right, so what are the incentive available? What are the criteria for company to apply for those incentives? So these are the topic that we look into. We also look into the other one is real property gains tax. So real property gains tax or RPGT is actually a different act. All right, it's not under Income Tax Act, it's under RPGT Act 1976. All right, so what it's all about is about real property. So what is a real property? Looking at, for example, if you have a house, all right, if you own a residential or commercial property, so these are real property. So there are some tax implication with regard to real property, especially when there is a disposal of real property. Because whenever there's a disposal of real property, then there is an exposure to RPGT. Yeah, so then you have to look into how are you going to compute the tax chargeability for RPGT, right? And then we also look into indirect taxes. So indirect taxes here, we are referring to sales tax and service tax. So these are the two taxes that we look into in taxation 2. Other than that, all right, we also have what we call here withholding tax and double tax agreement. All right, so this is an additional topic with regard to the withholding tax with income imposed on non-resident person on certain types of income. All right, and we also look into this what we call double taxation agreement. So this double tax agreement is between Malaysia and other country. And we are going to look into this because we want to have an idea on how company or even individuals, all right, who like to have business outside Malaysia. So what are the tax exposure, all right, that they will have, and how can they minimize their taxation. Similarly, if you're looking at a foreign industry, foreign investment, so we're talking about non-Malaysian having a business in Malaysia. So how are we going to have to tax them? All right, and then how are we looking at the agreement between Malaysia and the other country with regard to the taxation on the same income? Right, so these are the topics that we're going to look into for these 14 weeks. All right, and then we'll have tutorial, all right, for each of the topic, and assessment as usual. All right, look, at the end of the day, all right, we're looking at how to compute and how to analyze the essential features of corporate tax. All right, again, let's delete your partnership. All right, and then looking at RPGT and indirect taxes. So it means that at the end of the semester, you don't have to wait for the end of the semester, yeah? At the end of every topic, you should be able to compute what is the chargeability, what is the tax liability for the company, or even on the RPGT as well as the indirect taxes. And then you also must be able to compute and evaluate the relevant tax incentive. So we mentioned earlier that we have a lot of incentive given to companies, and because we have a lot of incentive, company has to choose between incentive 1 or incentive 2 or even incentive 3, which one is the best for the company. And for you to decide on that or to advise your client on which incentive to apply for, then you will have to do some computation. All right, because your advice should be supported, all right, or yeah, supported by some computation, all right, to show that you should go for incentive 1 because that gives you the lowest tax liability, or maybe because of the tax exemption, for example. So all these things will have to be, we're going to look into that, all right, how to compute all these tax incentive, yeah. As well as the withholding tax application, all right, you have to look at withholding tax, for example, given a scenario where the withholding tax is applicable or not. If yes, then what is the tax rate for withholding tax and how much is the amount due to the government? On top of that, what if you did not comply with the withholding tax provision? So there are some penalties, all right? There are some non-compliance, all right? So what are the implications of that? So a lot of things that we can look into under withholding tax. And again, but this number 3, all right, this is actually, of course, is also removed. Why? Because you have covered this basis period and commencement change of accounting date in your, when? In your, when you did your, command Z, when you did your tax 1. All right, so that topic is also removed from taxation 2 because that is covered in taxation 1. Okay, all right, your assessment method, you have your group exercises, you have group project, you have midterm exam, and also your final exam. All right, with regard to your midterm exam, it has been set on the 22nd of April. All right, I will put the note, all right, in the WhatsApp group as well on the date and the venue, all right, because we already booked a venue at the ICC, all right, for tax 1 group and tax 2 as well. And maybe advanced tax can also be there also, all right. So we have the venue booked. So please, all right, if you have other exam, please inform that the date is already booked for tax 1, tax 2, and advanced tax, yeah, for the midterm exam. Right. In terms of the, all right, group exercises, all right, maybe here I make it 20 and here is 10 only for your group project. Yeah, so I will give details on the group exercises and group project. And then your midterm exam is 20% and your final exam is 50%. Okay, let's look into the topic that we have, as I mentioned earlier. All right, remember that we are going to do the tax computation for your company. All right, so remember you have to go back your business income, your business expenses, and capital allowance, all this in order for you to compute your chargeable income. But the first 2 weeks, we're going to look into capital allowances. Yeah, so this we are going to look into. Okay, this is your course outline. All right, so we have course outline with the topic as well as the number of week that we are going to cover this topic. All right, but all right, when we go along, all right, I want you to refer instead of to the course outline, I want you to refer to the course plan. All right, what's the difference between course outline and course plan? Because course outline is the document that we submitted for approval, right? But course plan, we have to conduct whatever topic that is in course outline is the same in your course plan. But the difference is that in terms of the timing, yeah, because sometimes I think that maybe, for example, if you look earlier in your course outline, capital allowance is only for 2 weeks. But looking at the content, looking at the students, um, a lot of things that you have to do because there are a lot of topics under capital allowance. All right, so that's why I've made that topic instead of 2 weeks. All right, I will cover that topic in 3 weeks. Yeah, but again, inshallah, right? Don't worry, we'll cover all the topics on time, inshallah. All right, so we are going to look into capital allowance. So you have done this in your tax 1 for capital allowance for plant and machinery. So for tax 2, we are going to revisit your capital allowance on plant and machinery. All right, so this topic, capital allowance, is very important. Yeah, because you need to understand how to compute capital allowance, because later when you do your corporate taxation, you have to compute your capital allowance. Similarly, when you do the next topic, which is investment incentive, you still need to understand your capital allowance because you have to compute the statutory income. All right, given adjusted income, what is the statutory income? From there only you proceed with the tax incentive. So if your SI or your capital allowance is wrong, then you get a wrong statutory income that will affect all the dominance effect on your computation of your exemption or tax incentive and your chargeable income. So that is not good at all. So please revise on your capital allowance for your plant and machinery, because once you have mastered your plant and machinery, we have another topic, we call it as an industrial building allowance. So the first is on plant and machinery, but now we have a building that you can claim capital allowance, and that we call industrial building allowance. So how to compute the allowance? Similar. All right. Of course, you have to determine what is the qualifying expenditure. From there, what is the rate? In this case, you have the IA, initial allowance, as well as the annual allowance. All right. So decide on that. From there, you compute what is the IA and AA. All right. And then under the same topic, we also have controlled sales. All right. So what is a controlled sales? Controlled sales is when there's a disposal of asset. So remember, under normal circumstances, when there is a disposal, you have to compute the balancing charge and balancing allowance. To do that, you have to determine what is your qualifying expenditure, claim IAAA for several years, then you have your residual expenditure. Given disposal value, then what is your balancing charge and balancing allowance? So that is under normal disposal. But when I say it's a controlled sales, it means that there's a disposal of asset between companies, and these two companies are related company. So what do you mean by related company? Then you have to look into the definition later. All right. But when there's a disposal between companies or related companies, then the computation of BA and BC is irrelevant. All right. So there's a method for you to compute how to determine the allowances available to the disposer as well as to the acquirer. Right. So it's a controlled sales. Then we have another allowance, what we call agricultural allowance. And this allowance is similar. Allowance is a deduction given on any qualifying expenditure incurred by the agricultural industry. For example, the farmers, for those who have vegetables, for example, or even an estate. All right, estate here refers to your palm oil or whatever lah. All right, so these are the agriculture allowance. It means that if you are in the agriculture industry, most likely that you go for agriculture allowance. All right, and then on top of that, you may also claim capital allowance on plant and machinery. For example, you have what do you call that, a plantation, for example. All right, you need, for example, of course, the agriculture expenditure. All right, you need to buy the seeds. All right, you have to buy the land. But on top of that, you also have your tractor. So this tractor is a motor vehicle, right? So you are going to claim plant and machinery on that tractor. But other than that, which is agriculture in nature, then you're going to claim agriculture allowance. All right. And finally, a very small topic, we have forest allowance. And again, this one is given to the forest lah. Forestry means that kalau dia forestry punya business, then what are the allowance that you can claim? All right, because this is also part of deduction given to companies in the forest industry. Right, then we go into the second topic, which is investment incentive. Again, we have a lot of incentive given to companies, but they have to choose which one is the best. All right, so normally what we do here is that you have to compute what given a statutory income, or not given statutory income. You are given the adjusted income, then you have to decide what is your statutory income. So that's why your topic one, you must be very clear, especially on your plant and machinery and your industrial building, because that topic will be tested also under investment incentive. Yeah, because you have to compute the correct statutory income. Then only you decide how much of the income is given as exemption, because the income, the incentive is actually given as an exemption, means that you don't have to pay tax for a certain amount of income. For example, 70% of your SI is exempted. So you only pay 30% of your statutory income, right, to tax. So these are the incentive that we're going to look into. For example, we have the pioneer status, we have investment tax allowance, reinvestment allowance, and also promotion of export. Yeah. Okay. Corporate taxation, all right, again, is a revision from your tax one. But what the difference is that now we are doing for corporate. So when you talk about corporate taxation, means that the income and expenditure is more detailed. We have a lot more expenditure that you're going to look into lah. So you have your section 33, all right, revenue expenditure. You have section 34, special deduction. You have section 39, prohibited expenses. All these things will come back, all right, welcome. So do not, you get back all the notes from your tax one on this business income and business expenses. And then we have the RPGT I mentioned earlier on the disposal of your real property. We have the withholding tax in week 12, and we have double tax agreement in week 13. All right, and then week 14, we have your indirect taxes. So inshallah, all right, inshallah will be on the track, all right, even though it's a bit different from the cost outline, but I have adjusted the cost plan all right, based on my experience lah, all right, teaching these topics for the last few years. Yeah. Okay, on the assessment, okay, because I won't be here for the first 2 weeks, all right, it doesn't mean that you don't have class, yeah? Please, all right, allocate the time, my time, 2 p.m., 2 to 3:20 on every Tuesday and Thursday for week 1 and week 2. Look into this tutorial. All right, look into this. I have given you all the link to my videos, but I think that for the first 2 weeks, remember, first 2 weeks, what you do is that you're going to revisit your capital allowance, all right, on the plant and machinery. I think that there is a lot to do on that, yeah. But then, all right, you can also watch my industrial building allowance, part 1, part 2, part 3, and part 4. I have cut that videos into several parts lah. All right, so because it's a long topic, yeah, so you can actually watch the video for in the second week, yeah. But tutorial on CA include, all right, I've given in the teams is what we have material here by topics. I have arranged this topic 1, 2, 3, 4, 5, 6, 7, 8, 7. All right, there's only 7 topics there. Right, under capital allowance, we have all the plant machinery, industrial building allowance, control sales, and agriculture allowance. Forest allowance is not there because it's too short. Yeah. And I also have given you, for example, under plant and machinery, you already have the slides on plant machinery that you can refer to. The slides prepared by my previous student as well. All right, you have this question tutorial. Why do I have the answer here? All right, I should remove this answer, delete first. Okay, so you have this question, revision on capital allowance. All right, so you can do this question, revision capital allowance. All right, so what's the difference now? Okay, the difference is that normally in your tax one, when you do your tax, when you do your corporate tax, all right, or even your capital allowance, it's only in for 1 year, right? All right, year of assessment only compute for YA 2023. All right, but when you come to tax 2, all right, we are more advanced. We have 5 years tax computation. All right, you have to determine what is required here, determine the compute the following for YA 2019 to 2023, the capital allowance, the statutory income, aggregate SI, aggregate income, and chargeable income. So what you'd have to do is that all these, all right, you are given adjusted income. So you have business 1, and then you have adjusted income also from business 2, right? Because this one is rental of building. So it's not a section 4D. Rental income is an income from section 4A. Right, even though it's rental, but rental section 4A income. Then you have capital expenditure, all right, for business 1, capital expenditure for business 2. Then you have interest income, approved donation. You also have unabsorbed business loss. Why do I have business 1 and business 2? Remember that when you do your format for your chargeable income, you may have business income, you have business income 1, business income 2. So for each business income, you have to compute the adjusted income minus capital allowance, then you have statutory income from business 1. For business 2, you also have your statutory income from business 2, right? From there, you're going to combine, you have aggregate statutory income. Yeah, so that's why the requirement asks you first compute your capital allowance, then determine how much your SI. Then combine from business 1 and business 2, you have your aggregate SI. Then from there, move on to compute your aggregate income, then only your chargeable income, right? So you have to go back to the format for you to compute chargeable income for companies. Yeah, so you also have your what you have that donation, all right, interest income or other income here. Okay. All right. On top of that, all right, not only you have this capital expenditure, all right, for business 1, you have heavy machine that you incurred in 2019. So you're going to claim IAAA. For 2020, IAAA. So do that. Remember that please prepare your capital allowance in the table form, right? In the table form. And then on top of that, you also have additional information. For example, you purchase a commercial vehicle under hire purchase. So how to compute the capital allowance. And then you also have a machine that you purchase that involve the cost of preparing for the site for the installation. So this is what we call PCTL, all right? Preparation. What is it? A PCTL, preparation, cutting, tunneling, and leveling. So the rule of the 10%, whether it's 10% or below, it's less than 10%, everything is qualifying expenditure, right? And then you also have a Toyota Camry. So this is a passenger car. Again, it's under hire purchase. So you have to decide what is the qualifying expenditure and how to compute the capital allowance accordingly. Yeah. So this is the tutorial. All right. It's a revision for your capital allowance on plant machinery. All right. I want everyone to prepare this and I want to see the answer when I come back. All right. So once you are done with this, then you can proceed watching the video on your industrial building allowance. All right. I've given the link on this course plan. Yeah. So you have that. Okay. So I think that for week 1 and week 2, you can do your revision on capital allowance on plant machinery. And week 2, you can do for your industrial building allowance. Okay. And I'll see you again, inshallah. In week 3, we'll continue maybe I just give a revision a bit on IBA and we do the tutorial together, inshallah. Yeah. So I think that's all for today. You can watch this video, all right, during the class hours. It's only 29 minutes, means that now you can do your revision on your capital allowance for your plant and machinery. Okay. I will confirm again on the date for your midterm. Please remind me on that. All right. So I think that's all for today. Thank you again. Assalamualaikum warahmatullahi wabarakatuh. Boss. Tak boleh. Boss. I cannot. Stop the recording.